There was no speech, no siren, no emergency broadcast, just a line item. In the first quarter of fiscal 2026, a quiet crossover occurred. The United States spent $270.3 billion on net interest. Defense got $266.9 billion. Not war, not roads, not the future. The largest empire on earth started spending more servicing yesterday's debt than funding its military machine. It did not look like a battle report, it looked like a spreadsheet, which made it worse, because this was not a battlefield loss. It was a balance sheet verdict, a death warrant for the old American dream. This is the silent crossover. The moment the bill arrived, not all at once, month by month, auction by auction, $1 trillion at a time. This is not a recession story. It is a structural realignment. A global empire moving from expansion to maintenance. And when an empire pays for the past before it pays for ambition, you pay the price. Start with the number, the $8.5 trillion. By early 2026, the national debt became an operating condition, not a distant problem. Then comes the ceiling. $1 trillion in interest every single year. Roughly 19 cents of every tax dollar is now gone before the future even gets a vote. This is the trap. In economics, we call it crowding out. The government enters the capital markets as the biggest, hungriest borrower in the room. It sucks the oxygen, the capital, out of the air. It pushes up the price of money. And every startup, every business, and every citizen is left fighting for the scraps. Imagine the economy as a sealed room. When Washington needs to refinance a mountain of debt at 5%, it pulls the air out of that room. Not because it wants to kill your favorite app, because it has to roll over the empire. The cycle is now closed. More debt creates more interest. More interest widens the deficit. More borrowing keeps rates restrictive. By March 2026, the Federal Reserve is no longer setting rates for growth. They are reacting to a warning label. Now bring that story to your phone, to your favorite banking app. Most of them were not built for this world. They were built for 0% money, for cheap venture debt, for endless customer acquisition. At 0%, a bad business model can cosplay as a category leader. At 6%, the costume burns off. This is the capital cliff. Future profits are worth less. Debt capital gets suspicious. Underwriting gets tighter. Money still exists, but it is no longer democratic. It is concentrated. In 2026, we entered the sorting year. The subscale players are not vanishing in explosions. They are dying quietly. Acquired for parts, rolled up, sold for their licenses and engineering talent. Our analysis is simple. Up to 80% of weaker fintechs are being liquidated or acquired. Because in a tight money regime, the market rewards balance sheets and data, not vibes. Not a prettier shade of blue on a debit card. The winner of the interest trap is what we call the lean sovereign, a company with no dependence on cheap debt. Minimal burn. An AI pushed so deep into operations that the traditional org chart has collapsed. If AI can replace 70% of your labor cost, it does not just improve margins. It changes your right to exist. This is not a moral argument. It is a refinancing argument. To those who remember the 1970s, this is the return of stagflation logic. It rewards cash flow and discipline. To the young entering the workforce, you are not entering a startup economy. You are entering a productivity regime. If your company needs a giant team and endless fundraising just to stay alive, it is already dead. This is the part nobody wants to say out loud. The money did not disappear. It moved from innovation to maintenance, from your future to the interest on the past. Empires do not usually collapse in one explosion. They reprice. They downgrade their ambitions one budget cycle at a time. First, interest overtakes defense. Then, interest crowds out optionality. That is the 26 interest trap. A silent transfer of national energy, a structural handoff. Once you see it, you cannot unsee it. This is FinTech Archives. The file is open, and the crossover already happened.